What's up, everybody? Today we're going to be talking about the JEPI ETF, and if you're looking for income, JEPI may be the answer. Today we're going to be talking about the performance, strategy, risks, and whether or not JEPI may be a good fit for your portfolio. First off, we're going to be talking about what is JEPI exactly. So JEPI is an ETF that is issued by JP Morgan and offers high monthly income with equity exposure. So this ETF is actively managed and it is using a covered call strategy. Now, JEPI isn't just selling covered calls, it uses a different thing called ELNs, and we'll go into that later in the video. But as you can see here, this is JP Morgan's website, and they're talking about how it is a defensive equity portfolio that employs a time-tested bottom-up fundamental research process with stock selection based on our proprietary risk-adjusted stock rankings. Now, that's a mouthful, isn't it? It also says that there is a disciplined options overlay that implements written out-of-the-money S&P 500 index call options that seek to generate distributable monthly income. So what exactly are covered calls? Well, basically they let you generate income on investments that you own. So here's a brief breakdown of what that means. There are a couple of requirements. Number one, you own the stock. Number two, you need to sell a call option. What does it mean to sell a call option? Well, basically you sell an option on the stock that you own, giving the buyer of that option the right, but not the obligation, to buy your shares at a specific price. This is known as the strike price. And all of this is within a certain time frame, which is why it is a contract, and this is known as the expiration date. There are a couple of potential outcomes when selling call options. If the stock price stays below the strike price, the call option will expire worthless, and you keep the premium you received for selling the call. If the stock price rises above the strike price, the buyer will likely exercise their option and you are obligated to sell your shares at the strike price. There are a couple of benefits when it comes to selling calls. Number one, you generate income. You receive premium when you're selling calls, and that can be a source of income. Another benefit is that you limit your downside risk. Your maximum loss is limited to the stock's price less the premium received, which is indirectly lowering your cost basis. You also have the potential to hedge. If the stock price drops, the premium received can partially offset the loss. Now, what are the drawbacks to selling covered calls? The first one, and the biggest downside, is the limited profit potential. If the stock price rises significantly above the strike price, you miss out on all of that upside potential. And this is the reason something like JEPI will often underperform something like the S&P 500 index without selling any covered calls. And that's because a lot of the time the market is just constantly hitting all-time highs and you don't get all of that upside. Next, we're going to be talking about the performance and dividend yield of JEPI. So the dividend yield of JEPI normally varies between 7 and 10%. However, it is sitting at a healthy 11% at the time of making this video. JEPI pays out its dividends monthly, which is good for retirees that need a consistent stream of cash flow. Now, when compared to the S&P 500, as I mentioned earlier, due to its covered call strategy, it can underperform the S&P 500. And as you can see here, since inception, it has underperformed the S&P 500 by quite a large margin. Now, what is the long-term viability of something like JEPI? Well, it is quite viable, and the ideal market environment for something like a JEPI is a flat market. Why is that? Because it can generate premium from selling covered calls, but also those covered calls won't ever get assigned because it's selling out of the money covered calls. And that's about it for the performance and dividend of JEPI. Next, we're going to be talking about the pros and cons of something like JEPI versus the S&P 500. The benefits of JEPI is that it has monthly income. The S&P 500 pays out its dividends quarterly, and also the yield isn't quite as high. Another benefit is that it has lower volatility than the S&P 500. Looking at this chart, we can tell that the line doesn't move up and down as frequently and as dramatically as the S&P 500. This is because it's generating option income and it isn't only reliant on the underlying assets. It also has a strong backing by JP Morgan, so you know your investment is going to be safe, considering JP Morgan's long track record. The cons are that JEPI has limited upside in bull markets, as you can see over the past 5 years or so. It has underperformed the S&P 500. It also has certain tax implications. The dividends that you receive from JEPI aren't qualified dividends. What does that mean? They're taxed at a higher rate. However, much of the return is often taxed as a return on capital. Now, what does that mean? Return on capital isn't exactly taxed when you receive the distribution. However, it lowers your cost basis and you will be paying that whenever you sell the stock. So there is some complexity in owning something like JEPI when it comes to taxes, if you aren't holding this in a retirement account. So, of course, do your own research and always take care of your own tax situation. So is JEPI right for you? JEPI is generally ideal for income-focused investors, also known as retirees or people that want to have a high cash flow. It is not ideal for aggressive growth investors because of its limited upside potential. It works well as a part of a diversified portfolio, and you could have growth investments alongside JEPI. So in closing, JEPI has a 11% dividend yield. Very high, pretty stable, and it isn't as volatile as something like the S&P 500. Its expense ratio is 0.35%, which in comparison to other competitors is quite low. Are you invested in JEPI, or do you prefer a different income ETF? If you guys like this video, feel free to leave a like or subscribe to the channel. And that's about it for this one, so I'll see you guys in the next video. Peace.